Hello everyone, George DeSantis here with a look at the market for the week ending July 13th, 2018. As usual, we'll put up the disclaimer. I urge you to read it. Realize this is not investment advice because I'm not a professional investment advisor. And this video is mainly for educational purposes. Let's begin with a weekly chart, as we usually do, of the S&P 500. Last week we saw that we had an uptrend because the 4 EMA was above the 9 and the 9 EMA was above the 30 weighted moving average. So insofar as moving averages are concerned, we had an uptrend. Well, we also had this bullish Harami, that candlestick formation, where the body of this candle totally engulfed the body of this candle. So that was very bullish. And of course, we all know that last week we had a pretty good week. In fact, the 2800 resistance level that we were all looking at for a while, we just barely broke that level. We closed at 2801.31. So we're just closing above the 2800. The question becomes, are we going to see a retracement here or continue to go higher? Since this is a weekly chart, I believe that this market is going to continue to go higher. We have the Bollinger Band a bit away from it at 2841. So if there's any resistance here now, we might see somewhere around 2841. But right now we see that the parabolic is still below the most recent bar, telling us there is no indication to reverse this to a downtrend. So we continue to track this as an uptrend. If we look at MACD histogram is bullish. It's been that way for a few weeks now, for 6 weeks. And all these other indicators are in bullish territory, above 60%, above 50%, above 4%. So let's take a look at a daily chart. On this daily chart of the S&P 500, we can see that once these averages crossed here, the 4 above the 9 and 9 above, well, we didn't get past the 30 until we got here. But because this is the 50-day moving average. So remember, we found some support at the 50-day or around the 50-day moving average here. And now we are much higher. We are 2801.31. And so this trend is the distance between these moving averages widening. Some people call it the alligator's mouth. And as long as this is happening, the alligator is hungry, we are bullish. And we have the parabolic below the most recent bar. We have a little ways to go to reach that level of 2821 here for 2 standard deviations. And all these other indicators are looking pretty good. You can see our MACD bullish, RSI 12, bullish territory, Williams percentile above 50, and some of the rate of change indicator just above 4. So both the monthly and the weekly and the daily charts look bullish. Here's a stock chart of S&P 500, a weekly chart. You can see that we found support here at the 50-day moving average, and since then we've been trending up. Now on the impulse indicator with the colored bars, we have a green bar. We've had a green bar for the past 2 weeks, and that means that it's a censoring system. It means that we cannot go short. We're not allowed to go short, according to Alex Elder. We are only allowed to go long on the impulse indicator. Now you can see here that MACD is trending up from below the zero line. It's now above the zero line, and Williams percentile is looking to break above 20. If we look at the daily chart, we see a slightly different picture, but we can see that we found support here, the 50-day moving average, pretty much, and now we're on green bars for the last 8 or 9 days, trading days. So let's turn to some individual stocks. Go do something a little different this week. this weekend. I'm bringing up a chart of Visa here on Best Choice. It's a 1-year chart. This duration here is a year. And what we have is a plot of earnings and a plot of price. So if you look here, we see price growth. The percentage growth of price is 37.7%. Earnings percentage growth is 84.8%. So earnings are growing faster than price. So there is value here, in other words. And what I like to see with a stock that I want to hold for any period of time is that there's low volatility. The lines are very close to each other, and that price is growing at a slower rate than earnings, and price is likely to get caught up to earnings. So Visa is one of those that I have. I've been holding it for a while, and I thought we'd take a look at a few others. So here's another stock. It's listed on IBD, the IBD 50. It's ServiceNow. The symbol is NOW. And let me put up, this is the 1-year chart. So what you can see here is that price percentage growth is 84.7. Earnings are growing at 167. So you have this green line showing you that earnings are growing somewhat faster than price. Price is likely to get caught up to earnings. So that looks, I don't own this one, but it looks like something to keep an eye on. I don't own all these stocks, of course. I only own a few, but I'm just showing you a number of them today. Here's Adobe. You see a big overlap here between earnings and price. So it simply suggests that price is growing consistent with earnings. For example, price is growing at 84%. Earnings at 119%. So it's pretty consistent, and earnings are growing a little faster than price. So I own this one, I like it, and it's one of those listed on the IBD 50. Here's a chart of Google or Alphabet, and again you can see that here's the earnings line, steady earnings growth, and what we have is earnings growing at 36% a year and price growing at 21%. So again, you got a nice uptrend in the regression channel, and so if you were inclined to do so, this is one of those that might meet the criteria. Here's another one we might add to the list, and it's PayPal. So PayPal's earnings are growing during the year, a yearly growth of 111%, and price is growing at 43%. So you have this discrepancy here between price and earnings. And so we would expect price to sort of continue to increase the growth rate. And it's one of those I have on my list, but I don't own this one. I like the payment systems, but I only have Visa. Here's Facebook. Why do so many people like Facebook? Take a look at the discrepancy between price and earnings. Earnings growing at 83% a year, price growth at 11-12%. So Facebook looks like a real winner here. It's overbought. Now you want to also consider whether it's overbought or oversold. So this discrepancy is simply one criterion that I'm suggesting we could use. I don't own Facebook, but it would be something that I would look at in order to determine whether I want to buy it and hold it for any length of time. And certainly I don't own Facebook right now, but it's one that I would consider. Here's Amazon. Notice that Amazon, there's very little discrepancy here. The earnings are growing at the rate of 88%, 86%, and price at 99%. So it's very consistent. The earnings and price growth, they're pretty consistent with each other. And here's Intel, and you can see that a similar kind of thing. We have very little volatility, and earnings and price are growing pretty much at the same rate. And here's a chart of Apple, and we have a very similar situation here. Earnings and price pretty consistent with each other, 23 versus 24%. Just giving you a list of these that you can work with. Here's a chart of Pfizer. I haven't looked at Pfizer. I don't usually buy the pharmaceuticals. But this is an interesting chart. I'm surprised to see how much of a discrepancy there is here. Price growth at 9%, earnings growth at 181. Of course, there were just these three announcements here that pushed earnings up. So that's interesting. I don't own this, of course. Here's an interesting one too. This is Ring Central. I think it's one of those monitoring systems, alarm systems, and so on. RNG. Well, it seems as though they were losing money here. They started earning money here this year. So this is listed on IBD, the IBD 50 growth stocks. Now the price growth is 133% per year, and the earnings growth is 739. So IBD has this listed, and it's one to keep an eye on. The P ratio is very high for one of these startups, but it's not overbought. It's at 28%. And the price consistency is high. Earnings consistency is really high. So something to keep an eye on. It's a growth stock. Here's NVIDIA, and you can see that there's quite an overlap between the earnings lines and the price lines, the channels. And if we look at the growth rate, we can see price growing at 62%, earnings at 110. So NVIDIA is still looking, pretty good. I read recently in Barron's this current weekend, that the semiconductors are under some pressure here for a couple of reasons they cited. But in any case, the P ratio is 40, and it's not overbought at all. It's really oversold at 10%. So NVIDIA looks like a good one here, except for the negative comments about semiconductors in Barron's this weekend. Here's Microsoft. The conclusion here is that you can see there's a pretty consistent rate of growth between these two. Price at 46 growth rate and earnings at 41. And of course, Microsoft just keeps chugging along. And when you're looking at this 1-year chart, the volatility is not that great. It's very low. And that's the kind of stock you want to hold for the long haul, where you don't have that kind of volatility. You want a lot of volatility if you're trading, so that you may buy low and sell high. It's not overbought on the yearly chart. It's at 65%. And P is at 30, and consistency of price and earnings is pretty good. So Microsoft, as we all know, is a pretty good one to hold. Here's the Trade Desk, TTD. I used to own this a while ago. I traded it, There is you can see how there's much more volatility here. These yellow lines are much further away from each other. There's more of a gap between them. So there is more volatility here. It came out with pretty good earnings. You can see the earnings trending up here, and it gapped up, and it's still doing pretty well here. So if you look at the earnings growth rate, it's at 191%. Price is growing at 44. So it's one that I would keep an eye on, but I much prefer stocks that have lower volatility, where these lines are closer, like some of the others we've seen, like Visa and like MasterCard and a few others, so many others. And here we have United Healthcare. I don't own it, but you see, you like a chart that looks like this, where you have this regression channel with the lines pretty close, as I've been mentioning, and the earnings are growing at about the same rate as the price. So that's a nice looking chart to buy this and hold it for a little while until it proves otherwise. And here's a chart of Salesforce. It's one of those funny looking charts. You can see how the earnings shot up here and came in pretty good here again, a little more increase. And there's such a big discrepancy between the growth rate, just the percentage growth rate, and the price growth. Now, this is one I bought. I bought this one a week and a half ago. So I like CRM, and this is not the only reason I bought it, but I like the stock anyways. But steady growth. Well, that's all the time we have this week, and so I hope this is useful to you, and we'll do this again next week. hopefully.